Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, November 4th, 2019. In this video, I want to go over trade ideas. These are like my common theme lately. I'm looking at primarily either individual stocks or sectors even, and other asset classes such as bonds, gold, commodities, things like that nature that aren't directly related to the major averages. This is the S&P 500. It continues to grind higher, and I've done extensive coverage on that lately. I do that every day. I'll give an update on the futures or the index ETFs. So we're not going to go into that now, but you know my thoughts. You know, the trend right now is the near-term trend is bullish. We don't have any sell signals right now, not even short-term signals. Those could come close. And again, we are seeing things such as the VIX falling down very close to that support zone that where all corrections in the last couple of years have started. I went over bullish sentiment readings the other day, reaching some excessive levels. So as I go through this video, the majority of these trade ideas that stand out right now are longs. They're long setups that I'm going to cover in this video. That's kind of where my focus was. I will follow up, and if time permitting, there's a few shorts in here that stand out as well. I'll get to those, but again, time permitting. If I don't, I'll wrap the video up. Now with that, I want to say this on the longs. You know, the higher correlation they have to the U.S. market, if and when we finally get the next pullback, correction, or maybe more in the U.S. markets, it's going to affect those stocks. But a lot of these that I'm covering right now have very little correlation, if any, to the U.S. markets. So those are the ones. Again, I'll leave it up to you guys. Whether you're, you might have. I'm sure some of you listening to my voice have a different outlook for the equity markets and are comfortable here taking new long positions. Again, I'm not very comfortable as far as trend or longer-term swing trades. I just don't think the upside potential outweighs the downside risk of a sudden reversal. And again, it's what posture of the chart. So I'm going to go over some individual stocks that very well could. A lot of these stocks could continue to rally or rally period if the stock market corrects. So let's just dive into the charts. And again, just ideas I'm throwing out there. Grab a pencil, and I'll walk through these pretty quickly on each one. I don't want to spend too much time. Let's start with, I believe I covered this last week, EWM. That's not it. Emerging Markets ETF. Oh, and Malaysia. I'm sorry, EWM. Malaysia is one of the better looking emerging markets, that is. And you can see here we had a downtrend line that was broken. Both downtrend lines have been taken out, as well as that 28 level. I believe if I covered it on Friday, I'm trying to recall whether it was Thursday or Friday, we must have been right around there, and we did break out today. So there's a buy signal on Malaysia, and again, has very little, if anything, to do with the U.S. markets. You can see they're trading, multi-year lows, and while the U.S. stock market's a multi-year high, so it's almost an inverse relationship there. And so again, it doesn't guarantee that if and when the U.S. market corrects that this one will go up, but it does kind of show you clearly here. It's almost an inverse, if you will, of the S&P 500 chart. All right, so that's just one of many ideas. Let's get to some others here. Some of these I've already covered. Some of these are actually official trade ideas, like Goose. Just remember, Goose is scheduled to report soon. Going from memory, what is it, about the 12th or something? It's coming up. I warned of that. Again, you can pull that on the front page. That's under the active trade ideas. I liked it enough to add it before earnings because of the chart posture. Now we have clearly broken out. Even if I pull this triangle line up like this, a little bit higher, we have a breakout today, although we are hitting the first resistance level right now. That's 44.41. I mean, if you are concerned about earnings and you want to book the quick profits, we're up, I forget exactly where we entered, but we're up over 5% because this one's rallying about another 5% today. And you can see when I zoom in a little bit here on this daily chart, looks like we just broke out a bull flag action. Price action right there, and there's your flagpole, there's your bull flag, and so that should, if it continues to play out with this impulsive buying, that's what you want to see on a bull flag breakout. It should take us up to our first target, and I think that'd be an excellent time to book profits. And if you believer in the charts in this stock, this one, I know there's quite a few in the trading room that had bought this one before in the past, and we've traded this one. They make high-end, fancy, cold weather gear, based out of Canada, parkas and things like that. I live in Florida, so I'm not familiar with it, but again, a lot of about a year or so ago, there were quite a few on the site in that stock, and I posted some analysis. So now my thoughts are the consumer's holding up right now, and so therefore these high-end premium type items, as long as the stock market holds up, consumers are spending, and they could have a good winter coming up here. And remember, everything's priced into the charts in advance. I know cold season's just not even really getting underway yet, and about to be underway here soon. Enough on that. That's fundamental ramblings. But technically, we have broken out. And again, here's your first target on the trade, second target up there, and you'll make the decision whether to hold earnings. I really doubt if it's going to hit T2. I really doubt it's going to do that within the next week or so before they report. So just keep that under consideration. OROCF I mentioned recently. This one's just now breaking out today, so there's a buy signal. Now it's a foreign stock. That's what the F stands for. You have a couple candles there. Sometimes on these foreign traded shares that list on the U.S. exchange, if you have the F, you'll see these quirky candles. So you could raise that trend line up. This I think is the best fit. So I'm considering this a breakout today. And again, unofficial trade for now. A little bit aggressive. There's your targets, and I think it can make its way up there at about that 268, 275 level over time. Another one. It's another foreign stock. Is SQM. And this one I told you needed to break above 2878, call it 2880 to be safe, and it's popped its head up through there today. Not a lot of follow through so far, but if it can build on today's gains and print a solid close above 2880, I think it can work its way up here to the that first target there, about 3244. They're going to report November 20th, 9:15 at night. I guess it's a Chilean-based company, therefore that's when they're going to report later if you're here on the U.S. East Coast. All right, next up, let's see, SUP, Superior Industries International. Kind of seen a mixed bag of charts on the automotive sector. I would probably add this as an official trade if the sector confirmed. But again, there's a mixed bag of charts, both bullish and bearish, and a lot of indeterminable. I like it best when I can align a long or a short trade with a bullish or bearish outlook for the entire sector. And right now, I can't say with confidence that the outlook for the automotive parts sector is clearly bullish. So therefore, I'm passing along as an unofficial trade. But what I can tell you, it's a nice looking chart. Take this line away. You had a bullish falling wedge right there. Beautiful divergent low, clean bullish falling wedge. Broke out. Textbook back test, breakout and back test. So that's the breakout, initial leg up, first wave down, and what appears to be the second leg up right now. So I've added a secondary trend line right here that a lot of traders might be watching. Therefore, if we can pop above that, it should open the door for a move up here to 430, and that's a pretty decent run. You're talking about 30% if it gets there. So let's just focus on that 430 target for now. There's certainly the potential for more, but again, you're probably going to need some participation in the sector as well. And if I don't make mention on any of these, I may not, most of these I have not scrubbed the charts for earnings. So if you are going to take any of these, I highly suggest be aware when they report. This one, for all I know, could report. I think may have reported today. It's up 25%. Very well. Again, I didn't check, but if they didn't, they could report tomorrow, and you can get in this stock and and have a gap down 25-30% or more against your position. So just again, scrub the trades for earnings. Just be aware if they're about to report right before you take it, or in some cases if they've just reported, now you have that out of the way. That gives you a more all clear signal. You must let a much smaller chance of waking up to a big gap against your position if a stock has already reported. RAD, well, I guess this one's starting to run since I've started putting together a watch list over the weekend, and it's a lot of these guys are already running since then. I had it breaking out here. I'll even move that line up to be safe. I had it right there before. I'm going to move it to right there. Either way, I have it breaking out. 991 was a level. Boom, the pulse of breakout today up 12.4%. I don't know if that's earnings or just a technical breakout. Doesn't matter. It's most important to me is what the charts say. Again, you'd want to make sure it's not going to report soon if you take it, but it's a breakout today. So unlike some, remember when I go through these videos, there's a difference between a trade setup and an active or actionable trade. This is one that's broken out. Had I, gotten to this, last week or over the weekend, I would have told you guys that, I would have honed in on that, said, okay, I'm look for an impulsive break of 990. That would have been a trade setup, and it may never broken out. Trade setup, if it's untriggered, is an untriggered trade. That's it. It's just a potential trade that never became, an active trade. In this case, this one's actionable because it broke out today. It's on high volume. It's impulsive. Everything you want to see. First target there. And these are unadjusted targets, guys. Remember that. If I go through a video covering a basket, a handful of stocks, unless I specify targets, if you see T1 equals, T2 equals, those are either official trades or trade setups that I'm planning to add maybe as an official trade. But when you see these levels like this, it's just the level, the actual resistance level, and in that case you want to sell a little below. I should clarify beyond that. It's the actual resistance level that I expect a reaction on the initial tag if a stock gets there. So that works something like this. If we come up here, 1262 give or take, probably get a reaction. It could be the end of the run, or you could power up. It depends how the charts look at the time. And then, again, we'll get to 1958, same story, have a reaction there most likely. And again, depends how the charts look at the time. Alright, SM. I have a ton of these in the energy sector. In fact, I really should put together a separate video, but there's just, as I've been going through the charts, so many that stand out. As you guys know, natural gas has been rallying. Here, in case you missed, I'm looping back to SUP just to use an example. I'm going to move this trend line again. I showed you on SUP. And I'm going to use the example compared to natural gas. You have a big falling wedge right there, right? That's the primary pattern. You have a downtrend line here, downtrend line there, with positive divergence on your indicators. That forms a bullish rising wedge pattern. You had a breakout, and nothing goes up forever. You had a first corrective wave, which brought you in and put in a higher low. And again, so my views are this one has another leg up from here. And that corrective wave happened to coincide perfectly with a backtest. Now, loop back to an update. I've been highlighting natural gas really going back to just before it bottomed in late July. I think it was late July back here, and I showed you this chart. And this is why I've been longer term, bullish on natural gas, more longs and shorts. The shorts have been tactical pullback trades lately, but this is almost an identical pattern. Now again, I'm on a longer term chart here. This is several years, so the wedge is a little more distorted. If I went back here, here's your year marks right here. 2016, 2015. So if I zoomed in, I don't want to, this stockcharts.com is clunky. You can't just roll the mouse and zoom in. I have to go and type in and enter a different time frame. So let me just work off this one. Just know that if I zoomed in tighter, the wedge would look like that instead of this steep. However, this is what we have here. It's just like that one I just showed you. We had a breakout. We had a divergent low back then. We were oversold. We broke out. And most recently we were correcting. I said I believe it's a good chance to be the first corrective wave within a larger uptrend, because I had highlighted this chart back then showing you something similar to that. And so far that's what this is. Now natural gas, this is an end of day chart. Stockchart.com, they don't give you the real time on the futures, they just give you the end of day. And but nat gas is up today, so it has broken out. And again, that should open the door for the next leg. So again, I was just trying to compare two completely different securities. This is an auto parts company, that's natural gas, but the same technical formation here. And again, that's why I wanted to talk about that. Now, I know I'm all over the place sometimes when I do these videos, because everything is interrelated. Going back to what I was saying, I have a ton of energy stocks. SM was, I think, the one I just had on a second ago. These things are ripping. Why? Well, because crude oil, which I've been lately more bullish than bearish on, and making the case for that too, and natural gas are going up. So you have SM. I'm just going to rifle through these. AR. This one, and the common theme here, a lot of them put in divergent lows. Some have already broken downtrend line resistance, and that would be your next buy signal here. Some haven't. But either way, as long as you have that bid beneath the energy crude and natural gas, these guys will run. And get to know your company. They're all different. Some of them have a larger exposure to natural gas. Some have a larger exposure to crude. A lot of them do both, because where you pull crude out of the ground, natural gas is a byproduct of that. So you're usually, a lot of these guys will be able to benefit from a rise in both prices. And there's CRC. I'm just drawing lines here. I haven't had time to zero in on all these charts for levels. And before I go too far on all these stocks, let me just show you. I've mentioned recently, in recent months, these divergences that have been building. We had a divergent low back here in XOP. If you want to keep it simple, use the ETFs. I think there's more bang for your buck in XOP and XES versus XLE. XLE is the primary energy sector ETF with your big companies like Chevron, Texaco, Mobil, ExxonMobil, those big BP, and then some other ones in there, but they're the integrated oil companies. They do production, drilling, they do it all, refining in some cases. But then you have your specialty ones like the XOP is exploration and production of oil and gas, and then XES are your services, equipment and services ETF. And these guys tend to rise more. You can see this one's up 4% today. So I pointed out this divergent low. We had a little false breakout there, but this looks like we're starting to crack above there. And again, XOP. And yes, you can leverage these up with Gush and other things like that, but I'm just covering the charts of the one time. And there's still some work to be done there as well. You need to take out this downtrend line XOP, but they're starting to firm up. But again, if you go to these individual stocks, like you can see here, most of these I'm covering, they're up double digits just today alone. You have a lot more upside potential, but it cuts both ways. Remember that. Risk and return go hand in hand, so there's no getting around that. Stocks that can move up and down double digits in a day can certainly fall that much. This one is, I'm kind of giving you a potpourri of different stocks, different industry sectors here. This is a restaurant stock. Overall, I have a few shorts on the restaurant stocks right now, a few short trade ideas, but this one I like. Bulgari Holdings and Bulgari Holdings. They own, let's see. Yeah, Yahoo Finance is a great source, and go in and get profile, and they own Steak and Shake, Western Sizzler, Maxim. They're diversified. They own Maxim magazine. They engage in underwriting commercial truck insurance, selling physical damage and non-trucking liability insurance. So you can see they're kind of a little of everything. They're not very related, really. I guess, I don't know, maybe truckers eat at Western Sizzler a lot. I don't know. And read Maxim magazine. I don't know if I'm related or not. But point is, I like the chart. The chart looks good. Nice, clean, bullish falling wedge pattern. Trend line right here. And that would trigger a buy signal with first target about 110.50 and possibly more if this one can hold up. And I think I don't usually put the year. This could have been from last year. No, probably would have been back here. Yeah, November 15th. Okay, so they're going to report soon. I just wanted to point that out. I did check that one. Next one up, ADNT. I believe that's an auto parts stock. Yep, ADNT. Seems to be pushing up here right about, let me tweak that line a little bit, about 26.10. You can see it, and there's a gap above it. So this one has been consolidating in this range here with 26.10 as the ceiling, and that's also, as you can see here, it's the it's gap resistance. It's this gap right here from back in November. So if we can pop that, you're looking at least a backfill, and that'd be a pretty nice trade. That's over 2 points on a $26 security. That's better than 10% right there. And the bottom line is it broke out of the trend line right here, breakout and back test of the trend line, and has been kind of moving sideways. So again, potential there, and I think that's the second auto parts stock I covered so far. This is a Bombardier. Gringos down in the US call it Bombardier. They make planes, trains, and dues. The dues are, if you live in Florida like me, I used to have a pair of Sea-Doos. That's what we ride around on, like they're like jet skis, and basically the same thing. It's their snowmobiles. If you live up north, then you call them the Ski-Doos, and those are your snowmobiles and for the watercraft. They just same engine inside, and they just slap instead of putting skids on the bottom, just a planing hull. Anyways, it looks pretty good here. This is again the Canadian shares, because this is where they trade more liquid on the Toronto Stock Exchange. That's where the primary listing is, because it's a Canadian company, and it's cracking above the downtrend line today, but it has pretty significant resistance right here around $2 or so. I need to turn that level on for you, and I think if it can power on through there a little bit above where we are now, about 196 or so, about pretty much today's highs, I think that opens the door for a run up here to at least 238. Either way, it's a constructive chart. You can see it has divergence down here on the daily time frame, and I believe on the weekly as well. Yeah, I have a nice weekly chart marked up for the U.S. shares. I'll get to those in a second for you guys. But for you Canadians, if you want to use the, this is definitely the way to go if you're a Canadian. Buy the shares on the TSX. Right there is your nice weekly wedge, big strong divergences and everything else I like to see, so there's some potential for that one. For those of you south of the border here, or elsewhere, you want to trade the US shares, they trade on the pink sheets. That didn't work. BRDBF. Nope, not working. And that's why it's BDRBF. Okay, so there it is. There's a weekly chart. It's obviously going to look the same. It's the same stock. It's just trading again. This is if you trade on the U.S. So U.S. shares, you want to see them break about 148. Let's round that number off right there. You can be safe, give it a couple pennies, but pretty much anything over today's highs, look for an impulsive break. And again, I don't see a lot stopping it until about that 188-ish level, 187, give or take. And that would be a run of about, if I can get the line there, about 25% or so, and possibly all the way up here to the 221 level. By the way, I believe they just reported on October 31st, so you have earnings out of the way, so you have an all clear signal. If we get a breakout here, again, you need a breakout. It needs to break today's highs impulsively. All right, next up, PDCE, another energy stock. Look at these things just ripping. This one, another double-digit gainer right now. There it is, up 10% today, breaking out of the steep trend line, positive divergence right there at the lows. And again, oil and natural gas are running, so these guys, and they've been running, and these guys are finally realizing, hey, maybe this rally will stick, or at least that seems to be the perception. So again, they can move fast the other way. So what I like to do, by the way, is if you're new to trading or investing, or you have limited time or limited funds to commit, go with the ETF. XOP or XES would be my two, on those. And otherwise, if you like these individual names, because again, I'm going through these one at a time, they're all up double digit. These ones are on my watch list, and there's a lot more. I'm not even going to cover them all today. What you need to do, in my opinion, is I take a shotgun approach to this. So I'll take a half dozen to a dozen, or sometimes more, of the individual stocks that look the best to me. And why? Because a lot of these are low price. Remember, energy has been, make no mistake about it, in a vicious bear market for years. Crude, natural gas, everything, and the energy stocks. A lot of stocks that were around 10 years ago are no longer around. Chapter 11 bankruptcy protection. They go, you can wake up to it, and these guys can file. And it's usually the lower price, the higher the risk, but they can use, shenanigans to, reverse splits and things to get their stock price higher. So you might think it's okay. So just because you have a stock that's, $5 or $10 doesn't mean that the risk for bankruptcy isn't elevated. So just keep that in mind. And again, why do I take the shotgun approach? It's diversity. Don't put all your eggs in one basket. If you put it all here in, let's say, RRC, and then they're the one that, they announce a bankruptcy filing, you're going to lose most or all of your money, and it will happen overnight. It can happen very quickly, especially if the market doesn't see it coming. So and therefore, if you have a dozen, you know what, it's not going to hurt you that much. One of your 12 stocks goes down 50-60% overnight, the rest are powering up 10, 20%, 30-40%. The potential on these is very high. If depends where crude goes. All right. Next up would be, that was PD. No, it's RRC, CHK, Chesapeake. I know they do a lot of natural gas too. That was a previous trade there. Looks like first target hit. I can't remember where it was entered. Probably back here on this wedge. T1 and maybe stopped out there, but it put in the basis for this trade before was positive divergence here, and it went in, made a lower low and put in divergent low, ran up again, hit that T2 target once again off this divergent low. It's pulled back and made roughly a double bottom low right there, and that keeps the divergence intact. You know, positive divergence, you can have prices making lower low or equal lows with your indicators making higher lows, which you have here, and it's starting to move off the bottom there. So as you can see, this guy can run. You know, this stock and a lot of these lower priced energy stocks, that's about a 66% return right there, and you can measure it out yourself. You know, this is log scaling, so these moves may not look like much. That's about 100% return right here on this run, but you know, don't just look at the upside potential. Look at how much they can fall, and this is why stops are not an option with these guys. SWN, Southwestern Energy, another one up about double digits today. Again, like I said, I'm just jotting these names down as I rifle through the charts, seeing which ones I like, and these are some of the ones that stand out. And the momentum is certainly there now, so you can play them as momentum trades. Some have already broken out, some haven't. You can just, you know, trail up stops and let it run as long as the momentum is there in the sector. XOP, XDS already covered. PTEN, I didn't. Oil and gas, drilling, and another energy stock. There's your downtrend line right there. Not super well defined because we only have 1, 2, not even a third reaction yet. The bigger level to me is $10. Can pop through $10. These are old levels. Again, I told you I haven't updated a lot of these charts. I just kind of jotted down on my notepad some of the ones that stood out to me. But looks like a 20% plus potential if it breaks $10 up to about the $12 level would be my first target. All right, next one up, HABT, that's a restaurant. Habit restaurants. You broke out of this. What stood out the most here is this bullish falling wedge pattern right here, and breakout, and it hasn't looked back. And you can see now it's taken out the secondary longer term downtrend line today. No, I wouldn't chase it here. This one best on a pullback. It's already very overbought right now. Not to say that overbought can't become more overbought, because it was right here. If you know said, okay, well, I'm not going to touch a stock, from that point it became as overbought as right now. You can see I put a trend line there. And this is just a lesson, especially for those of you that like to short overbought, thinking a stock, oh my goodness, this thing's gone up 30, 40, 100, 500%, whatever that number is on any stock. In this case, this one had about a 40% run. So if you thought you were going to make money shorting it because it was overbought there, from there, at that point, it had another about 45% to go before the top was in. So that's why I always say overbought can and often does become more overbought or stay overbought for an extended period of time. Sometimes it's one and done, you get overbought and that's it, boom. Quite often it's one and done, but not always. So food for thought right there. Now, with that being said, is it objective? Look, if earnings are out of the way and you want to play a momentum trade, you can buy it and you set a stop somewhat above, trail your stops. This is a little gappy little stock. You can see it's prone to gaps. That's probably, well, that's not earnings because you have one on each side of 3 candles there. One of those might have been earnings. Here's a big gap. And just where I'm going with that is if your strategist says, okay, well, yeah, this guy's running, I want to do it, and I'll do a tight stop. Let's say under 10, 10.50, whatever your number is. Well, a stop can be bypassed. You can gap down below. This stock could gap down 10, 15, 20% or more and pass right by your stop loss order. So stop loss orders can help limit downside, but they don't guarantee you that you can only lose a certain amount. There's no way other than options to quantify your loss when trading stocks if you buy a put option or something on your stock. Targets, probably that reaction high right there. Yeah, and that's also a gap. But again, I think this one's better on a pullback if we get one. That's what I'd prefer. I'm gonna watch it for now. Just want to share it with you. All right, BJRI, another restaurant. I think that's BJ's Restaurants. There it is. And again, nice little chart here. You have the downtrend line, breakout. We back tested for a while with it setting up a near parallel downtrend line or price channel. Broke out, back tested that one twice, and it's been moving up since, and that followed a divergent low. Most objective buy points right here on the pullback to 39.63, which we had on Friday and Thursday of last week. And next target up here about 44.79. Stop below last week's lows, so Thursday or Friday's lows be a stop. Next target there, and target after that would be 49.15, and that'd be all I'd be looking for around this point in time. That might be old. Oh yeah, that's April. That's old earnings. So I'd have to check to see if that one's already reported. FAT, another restaurant. I have quite a few in the restaurant business. Fat Brands. Bullish falling wedge, breakout. And you can look for these funky looking candles. That just means it's thinly traded. Best to use limit orders, or if you use interactive brokers, I like to use their IB Algo orders, which is an algorithmic order program I put in, and they'll fish it around and between the bid and the ask and try to get you the best fill, so you don't have to continually chase it with a limit order that it's not getting filled. But I like this because we had a divergent low when we broke out of the wedge, and we're turning up. The PPO is curling back up right on the zero line. That gives you a bullish trend if we can remain above there. And so far that seems like it is the first corrective wave since the breakout, so maybe this one has another leg up there. BBQ, another restaurant. BBQ Holdings, symmetrical triangle pattern with a breakout pending an impulsive break and close. You can see it's had some intraday whips above there. Look for volume. Get a breakout. You can take it intraday if it's on high volume, 1.5 times or better average volume, or wait for a solid close. First target 575, then 624, and then 675. Next one, GTIM. We're almost done here, guys. Good Times Restaurants. You can see quite a few restaurants, so that's where my focus was. Here we had a couple auto parts stocks. This one broke out of this downtrend line here. Bullish falling wedge pattern, divergent low, everything I like to see right there. And it's back testing now, offering an objective entry with a stop somewhat below for the next leg up. You probably want targets if you're thinking about taking it. I'd say about 209 or so right there, and about, give or take, that 235-ish level right there. And that's pretty significant resistance. If you get that out of it, I'd be out of it. If I take this one and I get that 40% run up to about 235, I will exit, because that's pretty significant resistance. And since I only have a few shorts, I just want to mention that, this sector is also one, just like the auto parts stock, where I see a mixed bag in the charts. Wing, let's move this divergence up here. I haven't updated this chart in a while, so here's your most recent divergence right here. Divergent high there, negative divergence, and it's been correcting since it put in that divergent high, and it just recently broke trend right here. This trend line that goes all the way back here to at least 2017 right there. So you have a sell signal on the breakdown and back test. It gave out, lost the 200-day moving average as well. And where does this one go? I would say a little bit more downside, so not enough meat on the bone to make an objective short here. It's too close to that first target. So I would look for a reaction off there and maybe look for a short on a bounce. I just have to look at the charts at a time to see how far if and when to short that one. But I do believe that if it goes that 74.50-ish level, this one's coming all the way back down here at about 54.84. So that's an unadjusted target. And then PZZA, Papa John's, wash, rinse, repeat. You have, nice, trades well to technicals. You have a wedge pattern here. You can see the negative divergence, broke the trend line, boom. That correction ended with, you got it, positive divergence or divergent low, uptrend. Uptrend line breakdown back test. I don't have it marked here, don't know why, but you had, of course, another divergent high. Add that to the chart. So you can see the pattern is pretty clear. This Papa John's trades well to the technicals. And you can see bullish falling wedge, divergent low, positive divergence, breakout. There's your buy signal. There's your trend. So it's a very swing tradable stock. Here's several uptrends and downtrends. Well, grinds around and goes virtually nowhere. But again, it trades well to the technicals. So right now we're looking at uptrend line, which it's fallen to today. If it breaks that trend line, that will give a sell signal, but you have to be careful because you have support right here about 54.31. If 54.31 goes, I think Papa John's is coming down at least to this level, and quite possibly down here around the 46.70-ish level. And finally, last one, DENN, another restaurant, Denny's Corp. Looks like shorts are about to hit a grand slam, or they already have, or at least rounding third base right now. Wish I would have saw it earlier. You had a clean uptrend line, bearish rising wedge pattern there. Divergence is building for quite a while on this one. Broke down, fell to this secondary trend line here. Bounced off it, had a reaction there for a few days, broke below, back tested for a few days, and then boom. And this is what you want to see after a back test. I've talked about the S&P 500 and XLK, QQQ back testing those trend lines off the December 24th lows on the weekly chart. Well, like I said, you can back test for weeks, months. Maybe the back test maybe you regain the trend line. But what you want to see, it's that impulsive rejection finally after 1, 2, 3, 4, 5 days of back test, and that fifth day, that was it. They gave up. The longs capitulated, and the sellers stepped in, and the stock has been steadily moving lower since. Now, I have to say it's in no man's land. Actually, more so at support. I call no man's land when you're between support and resistance, but this is actually support. This would have been my first target had I seen this one earlier, but I can say that if it bounces there, probably get a little reaction there. Maybe not. It's pretty impulsive selling, but the best thing to do is wait for a break. It's getting a little, it's pretty oversold. I wouldn't short it here. If you get a bounce, great. Recycle in at higher levels, maybe about a midway back above this recent drop here, and or wait for a break of the 1968-ish support, targeting this next level down here about 1857, and then quite likely 17 over time. Alright, long video, but it's chock full of trade ideas. That's what I wanted to get out to, and what I like about these is you're not looking at major components of the S&P 500. So there's money that could be made on these stocks regardless of what the stock market does. All right, we'll wrap it up here. This has been Randy Finney with the Right Side of the Chart. Hope you enjoyed it.